Okay, so today I want to look at something called positioning and price. And positioning is one of those factors that, if you can understand as a trader, I think you will be able to see massive changes in your trading career. Because what I've come to realize is that price alone deceives a lot. So we must have other ways of determining price trend or the direction, because just believing on price alone, it has a lot of misconceptions, and also sometimes it gives false signal. And when trading with price alone, it's like using a shadow to predict the movement of an object, which is almost impossible. I'm not saying that it doesn't work, it works, but if you want to see clearly through the lens of the market, I believe as a trader you are not supposed to miss the positioning data, which is from the COT website. Okay, so today I just want to go through Euro USD. We'll see what's happening on the other pairs later, but today the main focus will be on Euro USD. So just want to confirm how positioning and price interact, so that you can see clearly how directions are determined, how trends developed, and how they exhaust. Because the most important for us as traders is that we, the retail traders, we don't have the capacity to trade high frequency systems, because we don't have the infrastructure or the technology that can enable us to do that. So that leaves us with only one option: to trade with trends. And as the saying goes, trend is your friend, but trends can only be your friend if you know when it will end or when it starts. So that's the major focus today. So I want to go through Euro USD from the time I started recording this data. I've gone back to 2022, and we just want to see how positioning has shaped the movement of price. Because one thing I know, or one thing I've studied, or one thing I've researched about, is that sometimes fundamentals may scream bullish, sometimes they may scream bearish, but unless those fundamentals are priced into the market, they will not have any effect. Yes, fundamental may scream Euro USD bullish, sometimes it can scream Euro USD bearish, but unless those fundamentals are priced in, that's when the market will move. Because from the microstructure perspectives, price will only move when buyers lift offers and sellers hit bids. As simple as that, from the microstructure perspective. Yeah. So unless the fundamentals are priced, no movement will be seen. And that's where position data becomes one of the tools that, as a trader, you're not supposed to miss. And so we want to confirm if this thing is true, because we don't want to base our analogy on rumors. We want the fact. So we are going to backtest these things from 2022 till to date. So we are going to watch how the positioning data interact with price, so that you can see trends clearly. Okay, so let's begin. We'll be using Euro USD. This is Euro future or Euro USD. So this is Euro USD CFD, and this is Euro future. So we are focusing on the Euro future because the chart is the same. The Euro future and Euro USD CFDs are the same chart. So let's have our focus on Euro USD from 2022. That's where the focus is. From this point, we don't want to go far. We just want to see the reality of this market from 2022. Okay, so let's start 2022. Where does 2022 begins? 2022 begins at this point here. This point to the downside. So let's go and check the data. Okay, and this is our USD. We're just going to scroll downside because I started recording this data from January 2022, so I think that will be enough for us to see something there. And we are going to see these ones. Market was most pullback and expansion are normal, so we'll see. So we check at 2022 from where was the date? Let's see the date. 2022 January 2022. January 2022. So we leave some data behind because we want a portion where data is complete. So we can even start from this point, from here, so that this way we have at least data is complete from this point. So going to downside, maybe there were some distortions, so we want a complete data. So let's start from this point. Let's check which date was this. So it was around June. Okay, June 2022. So from June 2022, just focus from June 2022 until from June 2022 to this area here. So we check that one on from June 2022 to September 2022. So check, go to the chart and check June 2022, which is this area. So we'll be using vertical lines. So from June 2022, is June until September, end of September, which is around this area. So what can you see about that area? So from June 2022 to September 2022, we are seeing a bearish move. And when you see the position data, what was the position data then is telling us about this trend without using the using the price? So if we check at that point, this is the area, this one here. We saw what happened at that point. Market went bearish. Now let's again check from this bullish area, which begins from let's check when did it begin. You can see the date here is September date 13 going forward. So September, let's go and map our September 13th. So let's say mid-September, around that area. Remember, yeah, position has started shifting, but even though the market is still trading low, but the positioning is changing because from what we are seeing. Then when did it end? Let's see at this point. You can see. Let's check when was that. So this was that bullishness that started from September, mid-September, ended on October 1st. It's not October. I mean January 10th, 2023. So from this point, we saw a bullishness until January 10th, around January 10th, which is around somewhere. Let's say January, mid-January, for the purpose of clarity. So at this point, so was it from that's what position that is telling us. So it's giving us direction of the market without looking at the price itself. So from this point, we saw that move to the upside because it was clear. It means that if we were recording that data every week, it gives us a confidence that market is, even though price might do its wiggles and waggles, but we know very well that the positioning has shifted to the upside. So we can use any entry criteria to make sure that we only take a bullish setups. Yes. Yeah. Now let's continue. Let's continue. Let's continue from where we stopped. Now we're coming. We had some 2 weeks of bearishness. It's not that's we might not consider this one. It's just 2 weeks. Okay. Now let's just check the date. 17 and 17 to what? This was 17 to 24th January. Let's check that. This not 17th. It was not something very clear. Okay, now let's go and look for our bars. We're continuing with the back testing. So from that one we see some market still went bullish. It was still a bullish until this point. When was this? This was around March 14th. So let's look at this March 14. So the problem here is that when the market is ranging, the positioning might not give us a clear direction. That's the only downside of this type of trading with positioning. When the market begins to range, like when the market was not moving in a clear trend, or like we are seeing this movement here, the positioning will not give us a clear direction. But when it's moving straight, we will see those things happening without any problem, and that is a downside risk that we have to accept, because nothing here is promised. But if you can stay with the positioning long enough, it will give you an edge. So we are seeing it suggested that from February 13 from around January 15th to March 14th, I was supposed to put bullishness, but market went bearish, which was not something that we were expecting. But to be honest, that's how sometimes market moves. Okay, so that is it. Let's continue. We'll have trends. We will have trends. Okay, so let's continue from there. When was around March 14th? So let's highlight that March 14th. March 14th. So let's say from March 14th around this area here. So this, what I've highlighted, the only downside here is when the market is ranging, it will give you false signals. But when the market is trending, you will you will get more into from positioning data. Okay, so now let's look at this from March 14th and see what we have. So March 14th is another. It also gives another bearish trend that ends around this area. Let's check that one. April. No, I mean April 11th. So let's check at the April 11th. And this one was too small. April 11th. We only have this region. So it'll give us enough. So this one also is suggested bearish, but the market went bullish. So you see, when the market is moving in wiggles and waggles, sometimes it's difficult for the position that will show you clear trends. But that does not mean that it is ineffective. We are going to have big trends like the one we have. This one's a huge one, this one's another one. So even if this one's gave you some false signals, but remember, during this area and this area, you had a very nice trade setups, which is what we need or what we want. Okay, so let's continue. Okay, let's continue moving to this. So now from this point, I think we have covered this one. We have covered this. From this one, the last one also do this one. So we are supposed to cover this. Which one? This one. Yeah, supposed to cover from that point. So when was that? That is around May 30th, 2023. So let's look at May 30th. So where was May? This May, around May 30th. Something around. No, I think I've skipped something. Let me go back. Oh, no, it's okay. From May 30th to, let's look at this area. That's May 30th to July 11th. Okay. May 30th to July 11th. What's happening around that area? May 30th to July 11th. So I've confused these things. May 30th to July 11th. Let's check where I was. So I can just get it from this point. May 30th, around this. Okay. Oh, May 30th. Yeah, May 30th. No, that is May. May 21st is 2024. I'm not doing. On 20, I was on 2023. Okay, 2023. May. Oh, there. Oh, see. So let's see. So from May 30th to this region here, let's see when was that. May 30th to July 11th, it was suggesting what? A bearish move. Let's check if that's the case. So May 30th here, it was what? A bullish, but no, the positioning told us that it is bearish. So still the same case, when the market is running like this, it will be very difficult the positioning to work. So that's why in a running market, it's kind of rough when trading with the positioning that, and it will give some false signal, and that doesn't mean that it's ineffective. We are still moving on. So we have had how many areas of inefficiencies? I think 3. We had 2 which were efficient, which gives very cleanly. Okay, we are still moving. This was a kind of a ranging market where there was no big impact to the upside or to the downside. But we are still continuing the position that we will see. Okay, let's continue from where we stopped. Now let's look at this area. When was this? It was July, mid-July. Okay, you can have there mid-July. Mid-July to, okay, mid-July to what? Only 3 weeks. So those 3 weeks allow until August 1st. Until August 1st. Yeah. Suggestion was the market was going where? So it suggested a price went bearish and the position went bullish. So those are areas where you have to endure those periods. And now from this point where market this was the transition points. Let's see from the transition point. Which was around August 8th to what? August 8th to end of October. So August 8th to end of October, this area bearishness. Now let's check the positioning. Yeah, August 8th, end of October was what? A bearish. So now you see when market begins to trend, it will give you very nice trends. So it gives that there a very nice bearish trend until the end of October. Now we are continuing. So you see how when markets ranging, it will give not that good signal, but when the market begin to develop trends, it will give a clear trend direction. Okay, so we have another one, a very nice movement. If we have started from this point, we see how market is moving to the downside, and it's a very nice game to the downside. Okay, so let's continue moving. Okay, we have just stopped from this area. Yeah, when Let's see that. That is November 7th. So we have to our line here, November 7th to when? To this area here, which is December 12th. Until December 12th. So it the positioning suggested what? Suggested from that point we had a what? A bullish market. Okay, yes, we had a bullish market at that from this point, and we are still struggling with this ranging market. From that we have got that yes, we had slightly bullish, slightly bearish, which is, let's say, a sideways at that point. Now okay, let's continue from where we stopped, still moving on. Now from this point, when was this? So this is a transition phase. You can just start from where the bearishness begins. So let's see what we have at that point. Let's see, around the end of December 26th, 23. End of December, let's say that's the beginning, end of December, around 26, around somewhere. Let's say, okay. From that area to when? Until this end of that bearishness on the positioning data, which was when was this? Which was March 5th, 2024. So March, where is March? Here. So which was, this was the rhyme very well, because we had got this is a bearish move, and also the positioning also suggested what? A bearish move, which is what we've seen this area here. Okay, this one is still at a transition phase. There is nothing nothing to say about it. So let's use this one from this point. When was that? That was around March 26th. Moving on, so March 26th. Can see March, at the end of March on that area. Then when did it end? So that March 26th entered this area right there. So when was that? That's around May. So May, this one, May here. What do you see? A bearish move. So let's see, that's it suggested a bearish move. So let's check on the positioning. Yes, this one, this area here was also a bearish move, which was very nice. So we are still continuing. Let's now confirm this area around this at that point. From May 14th to, so let's just start with the May 14th. Okay, May 14th is somewhere around, let's see here. Okay, we are still struggling with this ranging market, but yes, this is why sometimes we call what we call the drawdown periods. We'll experience them once a while in your trading journey, but if you stay disciplined and consistent, you will conquer them. Okay, so now from May 14th to, let's see, May 14th to this. Look at that area. So let's check. July 18th. So let's have this that July 18th. July or June. It was kind of a mixed. It was kind of a mixed period, bearish and bullish. So let's say what the positioning that I was telling us during those periods. It was suggesting a bullish season, but you look at the price actions towards both mixed. So still continuing. Remember, we are conquering this we are conquering this range market, but when we come into these trends, we'll see how effective the position data is when it's come to trending markets. Okay, so let's continue. Okay, where was our last point? Was around when was this? From July 18th. Okay, so let's see around this area what we had at that point. Okay, we had something. Okay, right now we have what one is. How did I jump into July? How? The last one was May. What? This one was May 14th. Let me see. That's a mistake there. May. Where is May? Where is May 2024? May 14th was here. So from May 14th to this area. From May 14th to June 18th, not July. June 18th. June 18th. This area here. What kind of arranging market? Now from June 18th to what point? From June 18th. It's June 18th. So June 18th to this area, to that point, which was July 16th. July 16th is around this area. So I told you, when market is an arranging market, this is what we will experience. Okay, that is it. Okay, so still moving. It suggested what? A bullish market. So the positioning suggested what? A bearish one. And it means something when the price and positioning diverge. It means something. When price and positioning are in line, it means something. But we won't go into that right now. Right now we are only using. We want to use the positioning for what? For identifying trends. That's the former is a different story that I will not talk about today. So let's see here. Now let's see from this point, the transition point, moving onwards. When was that? That was July 16th to until this area to September 24th. So July 16th to September 24th. Price action was bullish. Let's watch the positioning. That's point to confirm that it's also what? From this point, a bullish move. So the point is, positioning and price will help me only if you are a trend following trader. But if you are a mean reversion trader, it won't help you. So you're still going trends. You've seen how during this period, the period of a lot of consolidation, how we have struggled around this area, and sometimes that's what we face and experience as traders. Not every market regime is tradable, and we don't have something that can go in the future and come and tell us that the market's now trading. You just have to watch the price and position to see exactly what's happening. So market moves. So this would have been a periods of worst trading environment. Okay, so markets comes and it gives us a very nice bullish signal to the upside. Now let's continue from September 24th and see what's going on. Now from September 24th around this area, let's see what we have. And from that point we have see from September 24th to when did this end? It ends on September 24th to January 2025. Okay, good. So from this one till January 2025, January, yeah, this is when January ends. So this is now when positioning gives you large trend like this as a trend follower. When you have such this big trend, these are trends these are the zones where you're supposed to recover all the profits maybe you lost during this ranging markets. Because look at this one, how many months? 1, 2, 3, 4 months of large moves to the downside. Okay, so you enter around this area or even this area and exit at this. There's a way of doing that. I will not get in that today. That's a teaching for another day. Okay, so we see what happening at this area from the position itself when large trends begin to develop. Okay, let's continue. Okay, now from January to what? Around this area, from January 25 to August 5th, this one till August 5th. Now tell me. Yes, it is good during this period. It was a very low period for you and maybe you lost some money. But now let's see. Look at this drop down where the positioning provided that at this point. You see what happened at this area. Then again, look at this one from January to August, and you can clearly see it on the positioning January to August. From this point to all the way to August, this move where we are only focusing on what? On buying this market to the upside. This is what we call buying and holding. You're not going here for 1 to 2, 1 to 3, 1 to 4. No, you enter the market maybe at the first break of structure. Yeah, you can use break of structure. You can use trend line. You can use whatever you want to use here. Will work, because when the market is moving in a trend, anything that is trend following will work. That is a fact. Moving averages will work here. Trend lines will work here. Support and resistance will work here because the market is moving in a what? In a trend. So those are the regimes that you need. So let's say from this January around this area, maybe you're using a moving average. Your touch on the moving average will be maybe at this point, and that can be given at this point. These are the areas for entry, and you clearly capitalize on these swings up to the upside, and then you stop at this point. Now at this point you also come from August, so August to around August 15 to around that area. When that's now a very short trend, very short trend. In fact, it's just within until August 26th, a bearish move until August 26th. Yes, market was just ranging. So from August 26th, so during those low compressions, you just have to stay silent because market will explode. It will give you trend. Then this is also another small trend here. Then another. No, one thing is that you will not know where the trend is going to go where the trend is going to be short or long. Your focus is one. Look at how the data comes every week. If it continues moving toward directions and price complements it, you continue adding into position until that trend expires. So let's look at this swing from this point. That's what we want to see here. No, September 16th. Is this a bearish move? A bearish move from September 16th to November 25th. 16th, September 16th to November 25th. Cool. This is what we want. Now look at this one. Now this was the regime. This also gives you a very bearish move to the downside, and can confirm that one from the data. It was clear that was a bearish move. this area here. And now from this point we are seeing some bullishness to the upside on the Euro USD, which you can still capitalize on. So we are looking at the Euro USD from date from when from around December 2nd to date, a bullish move. So December 2nd, from December 2nd to date is a bullish move. Which we have confirmed from where we are seeing you can apply your break of structure here and see how markets moving, structure moving to the downside and giving you a bullishness to the upside, because it's evident here that market is moving bullish. Yes. So this is how you can use position data to make sure that, okay, of course you will not have so many trade like hundreds of trade, but those few, you will have few most probably accurate trade that they will be very few trades, but when they play out very well. So you don't need so many trades to win, just need few ones that you have that the odds are in your favor, using the price and positioning to tell you the direction. And as we said before, when the market is raging, it will be a difficult journey to go through, but when the market is trending, COT will print COT, I mean the position data will print money for you, but when it's ranging, I will experience some pain, and that's something that you have to be aware of. And sometimes it's something that because of time I'm not able to explain everything in this data. There's a lot of things that we have of open interests around here. We have got the longs, we have got the shorts. So there's a lot of things to look inside here that I'll not go through today. I'll just scratch the surface. Maybe can do others next time. So that's how you can use price and positioning to make sure that you are on the right side of the market. There's nothing sweet like being on the right side of the market, because if you are on the wrong side, you know you are the liquidity, but when you're on the right side, you enjoy the ride. So until next time, let's meet again.